Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thank you, Dan. Also, can someone please post in YouTube yesterday's stream? I planned, I saw, I traded. Let's share that with our visitors. Morning, Stephen, who are in YouTube. And if you're in YouTube, welcome to the Traders Lab. All right, let's get going. We have a lot to talk about. As they say, the trend is your friend, and the trend is continuing. We're going to talk about a quick review of yesterday, so you can see how the process works, and then how to move forward with the auction. And remember, everybody, this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile, and it's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There's no cost for this. There's a link in the bottom of YouTube if you're interested. It's about trader development, helping traders understand that there's a business here, and that if you approach it like a business versus a video game or make it up as you go, if you actually have a strategic approach that has a statistical edge that favors you over time, assuming you do the work, know where the trades actually are favorable to an outcome that works, in your favor versus the other participants, that over time, just like casinos, you can extract dollars from the other participants. And the environment we're in is 100% random. So we need to deal with some very substantial psychological obstacles to operating in a 100% random environment. You can extract an edge, but it has nothing to do with the random distribution of outcomes. How many times have you had multiple winners in a row and then you have multiple losers? What's the difference? It's random. So if we can accept we're in a random environment, then we can't predict what's going to happen. And we're certainly not going to get confirmation or certainty ever. So the Trader Lab is built on an understanding and helping retail traders understand the business they're actually attempting to be in and how to navigate that business and how to potentially create sustainability. And of course, past performance is never indicative of future results. And it doesn't matter how long you've been trading. What does matter is, do you keep waking up with the same outcome in spite of having winning trades, which anybody can have? And the illusion is that if we have winning trades, we just need to make it better. Now, that's so logical, but randomness being part of the equation means that we're always going to have winning trades. Well, suppose our approach can't make it better, and suppose we're just going to keep having winning trades in a random distribution with no edge, which means we're going to be losing over time. If that's your experience, it's very typical. So in spite of your best effort, it might not be your effort, it might be your process, and it might be your understanding of how the market works. And the market is not based on indicators in even time frames. It's ultimately based on participant behavior, and that's what we attempt to work with here in the Trader Lab. And this is why the Trader Lab was created, to help retail traders understand the business they're in. Why does the market do what it does? How might you get in alignment with it? And can you only interact when you have an edge that favors you versus the gamblers? General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, it's not a trade calling room unless we get into real time, and then we'll talk about it, as they say, right? Also, this stream is based on structured trades. They look like this. They're available to everyone in the Bookmap Discord Trader Lab community. You can use the link if you're visiting in the bottom of YouTube. And it's a high-level overview of some of the things you see here in the stream. And they're there at no cost, as well as a library of webinars in case you are inclined. Now, this is the day before yesterday's higher time frame. I want to pick up from where we left off pre-RTH yesterday. So this is what we had. We had an inside day, and we had two wicks over here. These 2 days previous to yesterday is a consolidation. Well, the trend being down, maybe we might agree, There's going to be sell stops under here, buy stops above here. Now, here's the next piece, and this is a quick review. This price was the highest volume price from day before yesterday. Think of it like a retail price or shopping. This trading is shopping. You just have to be a good shopper. So if this price is too high and this price is too low, the red line, what happened, and this is the volume in these 2 days, we can rotate around it. Well, if we fall away from this distribution, the market participants are saying potentially this is too high. Well, it so happens yesterday's ETH high was right there. Check the retail price. And if we reject it and go lower, then that's too high, and maybe this is too high. And we opened right around 90, which is our retail price or the highest volume in 2 days. Think Russian dolls, think fractals. This is the intermediate time frame, if you will, or maybe this is, and now we're actually, as day traders, trading inside this distribution. What we know is that's too high. This is the retail price. Sell stops under here, and yesterday's target was down around 31. Now, let's go to yesterday. What did we do? Too high. So for yesterday, I was only taking short trades. That was it. I'm trying to think. Yeah, I took a couple longs, but that was okay. But primarily it was shorts. So I was continually looking to come back to the high volume. That's called mean reversion. And then come back, take the stops out here, and come down to our target, which was 31.25. So all of this, so shorts were here to there and everything in between. So, and now let's look at today. Write a couple numbers down. 57.03 half is a target. If we get below here, potentially, and not a recommendation, 56.63-ish, possibly. These are higher time frame targets. These are previous targets. Now let's look conceptually. This yellow line is from way out there someplace, last year somewhere. I can't fit it on the screen, it's so far. But this was the retail price. The market tends to go and check prices. It's shopping. Trading is shopping. If this was too low and we went up and made new all-time highs, well, when we come back down and we start taking out levels, we'll check potentially a previous level. That's why it's a target. Now, what happened up here? In here, in the ETH, day before yesterday, this was too high. We checked the retail price. Well, if I'm going to come out the bottom, where's my next retail price? It's over here. Does that make sense? Now, let's go to today. Where's our next level? 57.03. And we're currently below it at the moment. We're around 90s. So, who knows? This is trading the auction. This is the Trader Lab. This is what we do. And of course, who knows? Now, I'm going to talk about some trades. These are structured trades. Now, if you have questions, please post them. If you're in YouTube, hi there. Thanks for visiting Trader Lab. Don't forget there's no cost for the Trader Lab community, and you're all welcome. One moment, I'm just checking the chat. Okay, guys. All right, let's go take a look at this. And remember, you have to vet everything for yourself. This is for educational purposes only. It's not a trade calling room, but I believe anyone can learn the trade who comes to Trader Lab if they do the work. Doesn't mean you'll be able to trade, because you might find you don't want to do the work. You just want to play the game. Not to be offensive to anybody, but you would be surprised. This is why so many traders go jumping from the only one thing you need to become a successful trader. And there's an unlimited amount of individuals out there who will gladly give you the only thing you need to become successful. And I think if you've been doing this for more than 20 minutes, you know that's nonsense. This is going to be the most difficult thing you ever do. And what's difficult about it is that it is counterintuitive, and it is not aligned with your mental state or your primal wiring, which is to avoid risk. So we have tremendous difficulties actually participating and executing, even if we do understand what a trade plan is. And if you come to Trader Lab, you can learn what is a trade plan? How do you navigate the market? How do you make sense out of it? How do you organize information? Where do you trades show up? And what do you do when you don't have a trade? How about you hang out? You're not here to be busy. You're here to, to be patient to find trades that give you a statistical edge. Now, let's go take a look at what's going on here. Apparently, the trend, as they say, is your friend. So we have the ETH low. We have yesterday's low, I believe, which is under here. The volume point of control is now here, which says, see you later, alligator. So here's what we get, RTH open. Now, for me, I only want to be short. I mean, I can't imagine why I'd want to be long, but doesn't mean that you can't trade both sides. The actual what do you do part of this is what is your time frame or fractal. Now, I always discuss this because there's traders who trade both sides, right? And for me, I found that if I'm in a trending configuration and we have just let's say, global upheaval economically, it's creating high volatility and the market is liquidating. I don't think it's too hard to imagine that maybe the better opportunities might be on the short side in alignment with the higher time frame participants. However, if you vet both sides of trading, in other words, the long side, the short side, both sides, no sides, you can trade that if you have a statistical edge. So what's the answer to all this? What's, quote, the right way to trade? How about the way that gives you an edge? And the other part is that you can operate in. Do you need wide, long rotations? For me, and it's only based on what the market offers, not what I want, I wait for structure to set up so I have range. So for me, 10, 20, 30, more, whatever. I think we showed a 60-point trade yesterday in the stream. I don't remember. But the whole idea of this is location, 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 edge, 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 and then trade management, targeting, and statistical probability. Speaking of, write these down. And past performance not indicative of future results. You got to vet these for yourself. The potential of taking, we opened lower inside of yesterday's range. Now, these statistics are available to everybody in the Bookmap Discord Trader Lab. You have to vet them. Past performance not necessarily indicative of future results. The potential of taking out the previous day's high or low is 85% probability. That's the first thing. Now, let me ask you a question. Do you think we're going to take out yesterday's high or yesterday's low? This is Trader Lab. You start looking at probabilities based on the condition of the market. And what happened yesterday? We tested the high side of this distribution and said, hasta la vista, we'll see you later. Now, this is resistance. Are you going to be a buyer going for that high? Or are you going to work with an over 80% probability of taking out that low? That's door number one. This is how Trade Plan Trader Lab can help you. There's more. There's an 83% probability we'll get to the ETH volume point of control. Got to be up here someplace. I think. Don't know where it is. Hold on one second, guys. I got to find this somewhere. Can't find it. Guys, where's the overnight volume point of control, ETH volume point of control? I probably have it covered up somewhere. Marty? 62, 57, 62. Okay, 57, 62. This, thank you, Marty, is I'm going to make a note on here just so we know where this thing is. Overnight volume point of control. What this is the highest volume in the ETH. And that's the same as that yellow line we see developing. High volume is a retail price. So what the market tends to do is it checks retail pricing. So I know, and what's the statistic for this? I know you're asking that. 83% probability we get there. Who knows? 70% probability to get here. And then the ETH high or low has over a 90% probability to take one of those out. Here's the ETH high. Here's 90, which is the retail price. Let me just run right back here. It's here, 90. And so we have naked volume point of control here. This was the retail price from here. If I get through there, I've got this, the low volume node, and I've got that. So once again, and that's around 59.70-ish. This is, I want you to see where all this stuff comes from. That's the outside edge, that low volume node I just showed you. This is a retail price. There's the ETH high. The trend is down. This is an outside edge. This is all before we start. And yesterday's low, we're looking to take that out, probabilities, and potentially the ETH low, and put the helmet on. Everybody tracking. This is all before RTH open. This is Trader Lab. This is what being a developing a potential career plan and understanding the business of this is all about. So remember, retail price, outside edge, too high, and we checked a key level. What does this high volume represent? Remember what we did. I have to show you this, and because it's more important than me showing you the current trades. If that was too high in the ETH day before yesterday, and it was the ETH target, and we rejected it, and now we come down, and now we are trading down here, and this was too high yesterday, and now this becomes too high for today. And there's one other little piece. What is it? This is high volume. And what happened against that 90 level? ETH high. Too high. ETH high. Same as the day before. This is the auction. If you learn to understand how the market works, I suspect that can give you a substantial advantage over other traders who have no idea what's going on. At least in my opinion. Maybe they know, but maybe they don't. So, retail price, and go up in time frame, if you will, or fractal, ETH, too high, and now outside edge. And the market can go anywhere, do anything. Now, back we come. RTH open. I'm laying this out for you because if you haven't put these kinds of pieces together and you are not prepared, you will not have an edge and you may not have sustainability. And I'm going to suggest to you, I'm going to go out on a limb and say a high probability you do not have sustainability. Okay, let's go. So, RTH open. Now, this yellow line is called the developing volume point of control. This is the retail price. Now, the market, of course, can do anything. So it can open here. We can reject it and go down. It can become resistance, and off we go. However, here's another little piece for our friends visiting in the Trader Lab today. If the retail price from the ETH is up in the 60s, that was the last auction that had a fair price. If I open below it, I know I have a possibility to come back and check it. Is it really too high? Now, part of the joy of all this, the market rotates. It can do anything. The other thing is, in the ETH, the market is short. I narrated some shorts early this morning. It had to be 5 I don't even remember when it was. It might have been after the report. Can't remember. And those are in Trader Lab. But that's not important. So the idea is the market is short. What does the market tend to do? Rotate. And what else does it tend to do? If the market is short, it can squeeze out those shorts to rebalance. So you need to know this, and it should be in your trade plan. It's not what the market will do. It's always what it might do. So if I break this way off of this and I see aggressive buying, here's what I know. I know potentially at the moment this is too low. That's what I know. I don't know anything else, but that's what I know. VPOC migration. This suggests we're going to go higher. Now, for me, I have no long trades in here because I want to be what? align with the short side. So to me, this is a squeeze. I do not trade along here. I'm not interested. Let's watch. Now, this here is called the variable high volume node. What I'm doing is tracking the participant pricing. In auction market theory, or the volume profile, if you will, is all about shopping. So let's take a look here. Too low, current retail price. Now, the market rotates down. Now, I have no clue here. For all I know, naked volume point of control, 70%-ish probability. Possibility, this is a short. It might be too high. So for me, the first thing I'm looking at is this level. This is the RTH fair price. ETH above us, RTH. Let me give you another statistic, one more. If I can find it. About a 70% probability. So I have 70% probability to go here, and I have probably about an 80% probability to get to the ETH mid, and I have whatever it was, 84 or 82% probability to go there. So I know since the market is short, that if I take shorts, I have to be careful of being squeezed, but this is a location to observe a potential trade. So I'm going to look at this. Now, for me, I have a higher probability to come here. If I determine I want to take a trade, I would be coming back here. I would be taking this trade in here, and I have to have enough range. It's almost 10 points, so let's see what it does. And these are not trade recommendations. Every trade takes stops. So right here, this is a location. I get a trigger. And right here would be your entry, and you have to get risk neutral. Now, either this works or you take a stop, whatever you do, you do. Let's look at it. Sellers are here. Micro high volume is here. I'm going to put a little line in here. What you're going to see me do is something called consistent. The market is random. Some inputs need to be anchored. Your behavior needs to be consistent so you can measure it. So here I get my sellers, location, 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 and settlement, all high probabilities. The sellers took over here. Buyers are here, buyers are here, buyers are here, sellers are here. We can put a little box around this thing. And location, location, location. This is your trigger. I'm just going to show you what they look like. Now, these aren't necessarily trades I would take. I'm showing you structured trades. And here's the entry. Your stop will be over here, and you need to cover from entry, which is one tick ahead of this, and their stop is 3 ticks over here. So it's about a 3-point, whatever this is. You can do the math. This is a short. Now, you enter on a limit. It creates discipline, and a lot of traders, so you know the problem with fear and looking for confirmation, will wait and then will enter here. Well, now your risk is from here to here. And guess what? Your scale needs to be here because you've got mid and VWAP. And you might get buyers at mid and VWAP, or you might not, right? Who knows? That part's not part of anything we can do anything about. So let's say we have a 2.5, 3 point, let's call it 3 points. If you're getting in at whatever this is here, what is that, 43.5, 44, you're in at 43.75, and this goes to 37. You'd be risk neutral, and your stop will go here. And where might you be trying to go? Take out yesterday's low and fall out the bottom. We have targets below. Let's watch. You get VPOC migration. This is a problem for the short. Now, this is too low. This now is too low. I'm going to put a little line over here. I'm tracking the retail behavior. Retail is shopping. Just think about it. It's very simple. This whole thing, trading, it's so complicated. No, it's not, in my opinion. It's random. That's a problem for us because we seek certainty and to avoid risk and pain. So we're wired for confirmation. And most of you who have been trying to build out a trading process, have built it most likely looking for confirmation and certainty. Uh, I'm going to say you're kind of pointed in the wrong direction as far as how to work this business. And you can learn the business in TraderLab. Uh, but, and I'm talking about what I went through as a developing trader starting 45 years ago. I did the same stuff, you know, because who knows? Nobody tells you or shares it with you. You're kind of in a vacuum. It's logical. So this is resistance, okay? So this is your short. You've got almost what? Almost 10 points in this one. You'd be risk neutral. Then there's a few things you can do. Trade management, it's up to you. Where does the trade fail? It fails here. Worst that happens is you scratch the trade. If you have a way to manage this thing, you could pick up a few burgers and a pizza out of it. Now, we come up to the next statistic, overnight mid. I have a sweep. What this suggests to me is subject to the behavior, a potential mean reversion to come back here. Let's just see what it does. I don't know what it's going to do. So right here, I'm looking at it right in here. Now, ETH mid. If I put this trade up, now right here, let's look at this behavior. I have micro high volume here, a sweep, which suggests a counter rotation. So I'd be looking for a counter rotation here. Now, there's some other things you need to know. I don't want you to forget. What is the probability of getting here? I'm showing you structure. I'm not necessarily showing you where I would trade. I'm showing you how to read the market. 83% probability. So what do I know? Now, this is going to blow your mind, maybe. I'm not trying to do that, by the way. I'm going to say is this is trading in fractals. This is too high. This is retail. The nature of the market is return and check. In a fractal, and think Russian dolls, Matryoshka dolls, they're inside each other. This is too high. This is the retail price, so I go from there to there. If this becomes too low, and I take this out, then I can come up to another level. Where's the next retail price? It's actually here. So if I see a rotation, I prefer to trade levels with probability. I also, and I'm only talking about me, I'm not saying it's a good plan. I also prefer to wait for levels that mean something. This means more to me than that. And once I'm through here, this is my next high volume level. So let's see the behavior. And I have a high probability. My thing is, if the trend is down, the only way I get into getting in alignment is something called mean reversion. That means the market needs to pull outside. And remember, this is shopping. So if we are trying to identify an outside edge, and it's not easy, it's called mean reversion. And the mean part of the mean reversion is where's the outside? Is it here? Is it here? Is it here? Where? Well, not blessed with knowing, so I don't know. So this is my target. Now I see triggers everywhere. What do I do? Well, if I have a trade plan, I don't have a trade here. And I don't necessarily have a trade here because this is the dominant input for me. It's the auction. The mid is just a mathematical line on a chart. It's 50% of something. Fine. But what is this? This is where the volume took place. And remember, your indicators are mostly price-based or derivative. Auction is volume-based because what's important is what happens at a price. Is there no volume at a price and it exhausts, or is there a lot of volume? In the store, a lot of volume means retail price. Buyers and sellers agree. Well, if we leave a price sometime, in the current RTH, what might we do? In all fractals and time frames, we can come and check a price. We can come back and check a price. If this price is too low and now this price is too low, we can come back and check a price. Does that make sense? So I'm looking out here for a short, and it's called mean reversion. Let's see what happens. There's a sweep. There's a location. Let's follow the yellow brick road. Right here, that little node sticking out, I'm going to open it up for you. And by the way, if you have questions, feel free to post them. I'll come up for oxygen in a little bit. Oh, I have to remind you guys, In YouTube, I posted a link. Our team posted a link here from yesterday's stream, and it's called "I Planned, I Saw, I Traded." It's the full deal as far as how to trade yesterday from the top down. That means the plan, the locations, the execution, the whole enchilada. You might find this useful. And then you look at this one as a continuation. So here's my location. There's no precision, micro high volume, stop sweep. This is a sweep. This is a sell sweep. What does that tell me? Well, let me go a little further. Buy sweeps suggest counter rotation. Sell sweeps suggest upside rotations. Sell sweep, upside rotation. Buy sweep, downside rotation. Location, location, location. Watch the pieces. Micro, high volume. Now, let's look. What's happening in here? Sellers are here. Buyers are here. These sellers take a shot on goal. Micro, high volume is right there. This might be a breakout, right? But what do I know? Buyers are here, buyers are here, buyers are here, sellers are here, sellers are here. 857 buy icebergs going off right here. There's a seller. Absorbed. I break high. I'm now above these sellers. The buyers are here. Watch the micro. Buyers are here. Buyers are here. Acceleration, sweep, no clue. Location, location. Now, what I do is I'm a location-oriented trader. I wait for locations that have an edge for me, and I don't know what's going to happen. Make a note of this. If you want to be in the trading business, you got to accept complete uncertainty 100% of the time. You'll never, and that's what stops most traders, I think, from succeeding. I mean, I believe anybody who comes to Trader Lab can learn how to trade, but being able to trade is a different issue. And a lot of it has to do with our need, our primal wiring. You know, oh, saber-toothed tiger behind the rock, I'm not going there. I'll see you later. Oh, I'm not sure there's a saber-toothed tiger behind the rock, but you know, I don't want to find out. I'm not going there. Our wiring is for survival. We've done a good job as a species, you know, with that wiring, right? But when you bring that wiring here, it's going to override your conscious, because it's kind of underneath. It's like that reptilian brain. You've probably heard about that. Well, the reptile is not reasoning. It's just reacting. So reason, I think, let's just assume, evolved after a run from the saber-toothed tiger, you know, or any other predator. So it's under the hood. You cannot control it, but you can learn to understand it and develop processes to manage it. Too high. Now, let's look. Sellers are here. Buyers are here. Buyers are here. Here's my micro high volume. You see it. It's a micro VPOC. Same concept. I don't know, by the way. Sellers are now below the buyers, and my last buyers are here. So this is support. So I have, if I put a little box around this, a micro consolidation. And what's important to know, and I don't know the outcome of these trades because I haven't been looking at these things, but location, location, micro high volume, that's the auction. It's a consolidation, trigger, test. Now let's just look at this structure and see what we get. Resistance. So let me show you the entry. If you took this trade, which would be my trade, this as a structured trade, the entry is one tick under here, and you have to vet this for yourself. This is resistance. Your stop is 3 ticks over here. And you take a stop. Okay? Real world, guys. So we've had one trade, or maybe two, I don't remember. But let's keep looking. So now I'm outside of here, and I have my next level going up, which is this. And yesterday's value area high. VPOC migration. This suggests I'm going higher. So this was okay. The problem here with this trade is as soon as this migrates up, you got to get out of this thing. So you'd get short here, stop here. This, there's two possibilities. When it migrates, it's either going to do that or reject it. So we are looking for it to reject this microstructure. And now in the higher time frame, the developing daily time frame, think fractals, this now is the new price. So this now is resistance, this is support. As soon as you see your buyer, you blow the canopy off and exit stage left. Or you take your stop subject to your plan. That's just the way it is. Now what? Next location. And where's the next location? Here, that red line. So what I've been trying to do here is trade outside in to get aligned with the trend. So the next, and I trade levels. And what works for me, and it might not work for, other traders, whatever it is, what I'm trying to do is probe to take out that 80% probability, which is yesterday's low, and go on the targets below. The reason I operate in the time frame of fractals I do, and this is not saying you should, is I'm probing the market for position. And I'll either get a scale and scratch, or I'll take a full stop, whatever, or the trade works. Welcome to trading. It's that random distribution. So the way I make up for these stops is I'm trading larger rotations. So if I get on my rotation, I'm going to, it's going to pay. Let me put it that way. If the market offers it, it's not up to me. Next level, VPOC migration, buy sweep, antenna back up again. I'm at a location. Variable high volume node. Now, I'm not good at picking the high of the day. Not one of my things. I don't know who is good. I know we all get lucky sometimes, but I can't pick the high. The high will happen before I enter. Now let's look. Is this the high of the day? Right? What do I know? I have a sweep. If I get in here, right here is a trigger, I would be scaled. I mean, that's not a problem for me. Now, I'm not saying anybody should be doing this. What I know is this is my next structure. I see triggers everywhere. And what I found for me is if I wait for locations that are auction based, my trades tend to work better. But because I can read this pretty well at this point, this is a foreign language. I don't use indicators, so I'm looking right here. What's going on here? I got my sellers here. So I have selling icebergs. I got buy stops. Now, I'm going to show you something in the stop and iceberg detector, just something a little interesting. So I'm looking for a short. Now, this is retail. If I come out here, I can rotate around it. That's one piece. This is called mean reversion. This is the mean, and the outside in is a reversion. The outside in is a reversion. Location, 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 and this. Location, location, location. Level. And I don't know where the high of the day is. I don't know anything. Wish I did. Not my job. So I'm seeing my sellers. I'm at my location. So now I'm waiting, and this is an obstacle for me. I break here. Now, let's watch. This is too high. So what do I have here? Location, location, location. It's very important you understand the auction. This is the outside edge. Where'd it come from? Let's come back. Very important. If you don't put pieces together in fractals or multiple time frames, you're missing the picture. There's the low volume node. That's the high of the day. So all I do is I'm saying I'm coming out here. If this is too high, I'm still trading rotational. So I'm outside in, aligned with the trend. Don't know anything more than that. Not my job. There's that location. Not my job. Too high. Sellers are here. Notice the rotation, the difference in the rotations. Yeah, I'm getting down rotation, but they're shallow. This is different, isn't it? Now I get a sweep here. This is my support there, and this is support. here. I get now this, no clue except this, and now I have my seller. This sell sweep suggests counter rotation. This now is my retail price. If this now is too high, I can sell it. And then I have to be looking at scaling here because my buyers are here. And if I come out and get below here, then the stops are at VWAP in mid, and then I've got other support down here, which I got to label. So this is called mean reversion trading. Taking a long time to go over this, but you know what? That's the detail of trading. At least for me it is. So all I'm doing is looking for shorts. Me, no long. Other traders in Trader Lab will be trading the long side. So let's look at how this works. Where's my support? It's there and there. Notice the reaction. Now, sell sweep, here's the possibilities. Rotation up, come back here, or just come back here, or come to an outside. I'm giving you all the ors because I can't predict it. Let's see what it does. BPOC migration. What does that tell us? Too high. Too low. Could have come here. So when I come into these zones or these areas, the antenna is alert. The other thing I know is retail trader behavior. Write this down. Think like a retail trader. Don't act like one. Where's their stops? VWAP and mid. I'm trade into their stops. And then here I see a sweep. What does that tell me? It tells me be aware of a potential counter rotation. For me, this trade could be over right there because the buyers are here. 447 sell stops came out. Thanks for playing. This is when your broker sends you the gift basket, and I have a sweep. The buyers now are here in location. Again, no clue. Buying icebergs, selling stops. That's the mechanical retail traders. Oh, I always buy the mid. Yeah, okay. I don't. I'm not saying I won't. I'm saying is I don't want to join retail traders. I want to trade into their stops. I don't want to be joined. I don't want to join them if I can help it. So, because the stops are the fuel. Here's the other thing to think about. Always think from both sides. This leg down has shorts in it, including us. If we took it, what else is in this leg? Buy stops. If I counter rotate, that creates my buyers. If I counter rotate, where were my sellers? Here, right? Well, at some point, if these sellers sold this, right? Isn't that resistance then? And if I come back up to an area where the sellers were active, is it possible they'll go, oh, really? Have some more. So when it comes up here, I'm always looking left to see where the sellers took control. And I'm always looking the swings for the stops. Because if it can come up into a location, take stops and exhaust. And I'm going to be looking for these sellers to come back in. I'm just giving you the long-winded explanation of why I take a short. And now the retail price shifts. This is now too high, variable high volume node, sweep, south of the border, short, Trader Lab structured trade. And again, you have to vet these and learn this. This is not mechanical. This actually requires some thinking and understanding of how the market works. This is an advanced process, and that's why it's different than what most retail traders spend all their time and energy trying to do. So now what? Too high. So where am I trying to go? Well, let's think about this. Microcomposite low volume node. Where was that? Let's take a look again. And yesterday's low. Where is that? 57.20. What's my target? What was my probability? Yesterday's low, 57.20. What's my probability? You wrote this down. To take out either yesterday's high or low, 85% probability. Is there any reason I would be thinking longs? When I hit my resistance, and I have an 85% probability of taking out either yesterday's high or low, and my ETH high tested this high volume and rejected it. This now, I open under this. This is my outside edge. It is aligned with the high of the day. Would I be selling this? Can you say yes? Maybe. If I'm looking, if that's too high and this is too high, and I have an 85% probability, this is thinking the auction and probabilities, statistical probabilities, trade plans, and accepting the random outcome. Can you do that? You can learn this. VWAP, 85% probability. What do you think of being short? Anybody? Then what? Next target, 57.05. Where's 57.05? All of this on the price map. Right there. It's that red line. That was the next target. And then if we keep going, maybe 63. And then it's structured trades and trade management. And I think we have some other trades coming up here. Actually, 9:30, the first hour's high or low has over a 50% probability, and it's called the IB stat, and over a 90% probability. I hope I said that. And you have to vet that again for yourself. Considering the trend is down, I think it might be a reasonable assumption that you might want to trade the shorts, continuation trades. What do you guys think? So where's the IB low? Let me try to find that one. 6. I got to change colors on my higher time frame chart here. Not a good color. Is it like 71 or something like that, guys? TraderLab, would you confirm where the IB is? Because that's a structured trade we want to be looking at. Gary, the ETH is the extended hours. It starts at 5 p.m. Central Time and ends at RTH open at 8:30 Central Time. 57.24 half. Okay, it's covered up. Thanks, guys. This is the first hour's low. It's called the initial balance low. And the theory is that if we take this out and we come back to it, and by the way, the ETH low is a target also. And the stops, yesterday's low. So all this is on the hit parade. 9:30 Central Time, this sets up. Now, this is a potential short if you want to trade this. Not for me, okay? Because I don't want to sell the mid. But I do get a trigger. Let me show you the trigger. So this is the sweep. There's the VWAP. Nothing wrong with selling the VWAP if that's your thing. For me, it depends. But let's kind of look at this. This is an outside edge out here. Let me show you what this is about. These rotations in here, these little things with the high volume, they're auctions inside of, remember, fractals. You guys think of time frames. I don't use time. There's no clock in the developing time frame. It's rotations and whatever it takes for the participants to go, no, I'm not paying that. And then we do it again over here. So inside of all this volume are fractals or smaller auctions. So this is an auction, and then all of these are auctions. Now, the thing about an auction is there's a too high, too low location. They're called low volume nodes. And the market will auction these things. And shopping is the same way. You go to a store, if the price is too high, you're not going to pay it based on what you perceive to be a fair price. Well, you won't pay it up here because you left that store. Distributions or consolidations or stores, they're all auctions. If I leave it, and then I come down, and then I start this one, this is my current retail price. If I find too high and I won't pay it, then I'm going to come back here. And if I come back here, I can either rotate or reject this price, and start a new rotation. This is fractals. Remember, Matryoshka dolls. So this suggests a possible short. Again, up to you. And where do I come? Outside edge, retail price, microstructure. Here it is in the fractal. This is the chart volume profile. All I'm doing is looking at this in isolation. This is the whole day as it develops. And this volume and this little micro right there is inside of that, trading in fractals. So I isolate microstructure for triggers, and I keep it in alignment with multiple time frames, as you think of them, or fractals. So right here is too high, and I know this low volume here is the outside edge of this. If I get below this, then I'm going south. Let's see. The low volume outside edge is here. So this is too high. Break. Now I'm out here. Once I'm below here and I break, I can sell this. And I have a buy sweep. It suggests lower. And why would I be doing that? Yesterday's low, okay? And I'm coming into the IB, which is the first hour at 9:30 Central Time. I got a confluence of elements that suggest take a short, Tom. And then what else do I have? Don't forget yesterday's low, ETH low, and then helmet. And then going for this. That was the next target. Notice the reaction. Notice the reaction. Is that a coincidence? I'm going to say to you, maybe. I don't know. What do you think? Now, the IB is here. We have two trades here. If we come back inside and we get VPOC migration, I think I'm getting caught up, no? This is too high. This is now the retail price. Too high, too high. I'm in multiple time frames. If I rotate back and this price is too high, right here, and I see my sweep, then I'm looking for a potential trigger for continuation short or nothing. If I take a short, my obstacle now is the initial balance low. So if I get into this thing, which would be a trigger here, I've got to be thinking about this, the scale, and then hold. This is a structured trade. Now, whatever happens, happens. You get stopped out, you get a scale, but the goal is to get a scale. It's like getting a free look. VPOC migration. So what do we have? Too high, new retail price. I'm not paying that. Now, the market, if it crosses above here, can come back here. So we can't predict anything, right? We just sort of try to get in alignment. And then whatever happens, happens. This is Trader Lab trading. Now, again, no clue. There you go. Current questions. Thanks for your patience, guys. CJ, I'm getting a question. Thank you, CJ. About a variable high volume node, I always mark them because in the developing time frame, at one point, this was the retail price. And the way I've kind of connected this stuff to my experience in life in the outside world is shopping. So imagine this is a store. The auction is an attempt to find out what's fair, and if it becomes unfair, we leave it. So it's shopping. So I look at this like shopping. So if the price up here is too high, I'm going to mark it because it's telling me something. It's the most important information I can get because it's the current perception of value. And if I leave it and then that value or retail price shifts here, I think of this like a store. Shoppers went to the store here, and they said that's too high. They get in a car and they leave the store. Well, now I have resistance. If the retail price comes down and I return to it, knowing that this might, I'm always going to say might because that's all you got in this, might be too high, I can then sell this. And I know if it comes up here, I can get stopped out. Now, if I get a structure, a triggering structure, this and this, I can sell this, but my risk is above here. The other thing I can do is not do anything with it. But at 9:30, we have something called the IB continuation trade, and it happens at 9:30. So this pullback is a potential short if it's in your plan. VPOC migration with this, it's a potential short. It is a structured trade called the IB continuation trade. And then your target is this, wherever that is. That's your target. And where'd that come from? And by the way, targets are not, hard. They're soft targets. Let me show you the level. Remember, 63.75. So think about this. If this outside edge and this is the highest time frame, all the volume ever up at this area since we've been here. Too high, too low. So I'm trading fractals. Most of the time we're not dealing with this. We're trading this. But once I get outside, I'm now going up in time frame to see my levels. And the more you pull the lens out, the more slop there is. So that's okay. So this is my target. Now the thing about targets is, since we're in a random environment, there's no precision. What I do is my trades are very structured. My trade management is also structured because I don't know this is going to come here. Why didn't the market go here first? Right there. So if I put a trade on, I'll put my order out over here because I know it has a possibility of getting there. And then I have trade management. I just follow it. And that's something everybody vets for themselves. I'm seeing the sweeps, which suggests a counter rotation. So I'm aware, because I'm using an order flow tool, that I've got sweeps. And when I see sweeps, I'm on the lookout for counter rotation, sell sweeps. I'm not getting it here. So it's not breaking structure. Sellers are here. Sellers are here. The buyers tried here. Sellers said, here, have some more. There's an iceberg going down, sweep, sweeps. How do I manage this trade? I just trail behind it. And the other thing I know is I can get taken out and then it can go down another 30 points. And how am I going to feel about that? I'm going to have a bad feeling about it because that's the loss. That's the emotions. That's that I want it all thing. Well, it doesn't exist here. So what do you do about that? How about you learn to accept that when the market offers you an opportunity, does not come with a price tag or a guarantee. It comes with maybe. Maybe it'll get here before it counter rotates. Maybe I'll get stopped out. Maybe I'll get a point out of the thing or nothing. Maybe is all you got. If you remove this prediction thing, wrong business, let's talk about gaming, casinos. They don't predict the cards coming out of the deck. And I'm repeating this because I know we have new visitors. And they don't predict how the gamblers play their cards. They're in a 100% random environment. Well, if that's the case, then what? Then you have no control there. Where's your control? It's in your plan and actually following your plan. That's the only thing you control. Just like the casinos, they only control the games they play, and they play them exactly the same way. And they do pay to gamblers. That's the business you want to be in. So you got to adjust your psychology to match the business you're attempting to be in. I understand POTUS is supposed to speak, I think, around this time, and that can create some outsized volatility and risk. So mind your risk. Also, I have to remind everybody, Monday I will be quoting the June contract. So I'll be doing rollover and adjusting all these levels to the spread between the March and June contract, which is June, I believe, is expiring end of next week. So I roll over. and you guys can track the roll. You don't have to roll over for Monday. You can wait a couple of days. It's whatever you want to do. It's not up to me. I'm just telling you what I do. So our levels might not match unless you roll over. So this trade would be over. So this is a structured trade, the IB continuation trade. That's a nice short. I don't have a problem with that. Now, this is kind of the way I attempt, underline, to trade. So if I take this thing, and let's just assume, I'm slow, which I am. I get in at 15 and I get taken out at this, So I'm out at 85. Okay. That's a 30-point trade, isn't it? This is kind of the way I work. I don't want, if I'm going to take stops, which I take every day, I want to get paid. So I can afford to probe the market as opposed to being right or wrong. I attempt to probe the market with reasonably tight stops, 3 points or less, and take a stop or take a scratch, which is better, of course. And I do take full stops and then just reposition. And based on the condition of the market and the range and the rotations, that's how I get paid. I don't avoid stops, and I don't avoid the disappointment, and I don't avoid the emotional response. We got to watch this right here. Here's what we have. Outside, low volume, this sets up something called mean reversion. So the possibility here is to come, and this is a little funky. Let's see if it does it. Two possibilities. Come back there, come down here, continue down, or squeeze. Now remember, the market is short. What does the market tend to do? The market goes down to go up. And the go up has to do with the stops that are in this leg. So this is very aggressive because if we come out of here, then we can come here. If we come up in here and we find our sellers again, which is in this area where the sellers took over, then we might want to sell it. So we have to watch this and why stops. And thinking in multiple time frames, if you will, this. So I don't have anything here at the moment, but what I would do is, and this is not a recommendation, I observe areas. Now, here's something else you need to know. This acceleration creates something called a low volume zone. It's that right there. It wasn't auctioned. So I can come up in here and come back here. That's what I know because there's no chop, chop, chop in here. This is the last area, and there's buy stops here, buy stops there. I should say buy stops here above this swing. So when I'm trading, I'm looking at areas for potential reactions, which would be a potential short to here. And if I don't get what I'm looking for, I know because I have this slipstream, no auction really, that this is the mean. So this is called mean reversion. Now, I don't take longs in this context. Other traders in Trader Lab are going to see this as a long to come here. It's the same trade we're taking on the short side to come back here. This is the same trade from the other side, except it's counter trend. So depending on your skill level in Trader Lab, you could be taking this back to here, or you could be looking at this and see how far out we come for continuation trading. And if we push through here, then I go to park. Just a thought. And where else are stops? Above here. So back here, mid, VWAP, IB, outside edge. So the next area to look is going to potentially be in here. You guys have questions. Thanks for your patience here. I just had to get through all of this. How we doing, guys? Chronomaster, HVN, LVN are nodes that are on the, yes, they're in all fractals and time frames. An HVN, a high volume node and a low volume node, are just really This is a low volume node. That's a high volume node in the developing time frame. When I go up into a higher time frame or fractal, I'm then using these what's called microcomposite levels. That's next level up. Then I go up to the super high time frame. I'm using these levels. They're like Russian dolls, so they're inside of each other. So when I'm looking at all this, I'm putting all these pieces together. Then when I get down to the microstructure, it's all the same. So once you understand how the market works, you'll start seeing the auction in all fractals and time frames. Right here is an auction. There's the micro high volume. But what's more important? This higher time frame. Think of the volume, the retail, if you will, price like a magnet or a tractor beam. And it happens in all time frames and fractals. That's why this level is a tractor beam. But we got there in the ETH. It was too high. You see how this works? Yesterday's ETH, this day, this was the overnight high, too high, tractor beam. Now, yesterday, this is too high. We opened here. Today, what's too high? Well, the low volume. Now what? Is that too low? And is this too low? Well, we came just down over here. I don't know. Let's see what we do. I'm just showing you multiple time frames, if you will. And time frame for me doesn't exist here because how long does it take for the participants to interact in, like here? How long did this take for that? Or for this in the migration right here? I see the sellers. My sellers are here, and buyers are here. Short. So this is our target on this. You guys have questions? Let me take a look. And by the way, remember this weekend, I'm going to suggest you guys review yesterday's stream, and I'll make this one public. It'll be available if you want to see these things sequentially. Every day is unique, but every day is built on the previous day's behavior in the auction. And also what happened previously, last time we were here. That's why yesterday 23 was a target, wherever that went. And yesterday's low because of over 80%, 85% probability to take that out. So you can see how these pieces come together. And then whatever happens, happens. By the way, no way to predict. Now I have my sweep. So let's watch this behavior. And let's remember where the stops are. Here. And there was good selling here. So I have resistance here. I have a sweep. And I have the VWAP in the mid. What do we know? Retail traders keep their stops here. What else do we know? We can get a counter rotation here because there are mechanical traders and they get paid. Now I have over 1,000 icebergs taking the other side, right? You can see them. Whoop, 900, it aggregates when I put them together. Buy stops, more icebergs. So I got 1,100 icebergs selling this. Why would they sell the mid? Because they need something to sell into. So I have a sweep. I'd be stalking a short. It's not a trade recommendation. When I say stalk, there's nothing automatic about what I do. What I do is observe behavior in microstructures at locations, and I do not, this is not a trade I would take. I'm going to narrate it for you. And the reason is, if this was not here, I'd be looking at this. But what is better for me, there's stops here and there's stops out here. So if I get a rotation, the better trade, and it doesn't mean it'll work and it doesn't mean it'll ever get there, is to squeeze these guys out, take their stops, and then get short for continuation trade. So my next trade is here, but if it doesn't take this out, I just don't take the trade. And it doesn't matter. Why wouldn't I take this trade? I have everything here with one exception. And here's the other thing. Testing yesterday's range. This is all good. Better is here. Let's see what it does. And if it doesn't come back here, I just wait for the next bus. Part of having a trade plan is knowing not what will happen, but where the edge is. I have less edge taking this short than I would if I come out here. And I can take a stop on either one, and either one can do the Acapulco cliff dive. It's not for me to predict. What I know is retail trader behavior. Write this down. Think like a retail trader. Don't act like one. Where do they put their stops? VWAP in mid. Do I want to take a short here if I know that, and everybody else on the planet, that the stops are sitting in here? Or do I want to use those stops and look for exhaustion and look for the passive side or the icebergs taking the other side? That's my objective. And this could very well be at the short of the century. It's not in my trade plan, and this is not a recommendation. It's not in my plan to take this trade at this location. And it's only because of this. So let's see what happens here. Any more questions, guys? By the way, starting Monday, I will be streaming from Costa Rica again. So I'm going to be back down there, and I'm going to try to be friendly with the monkeys so they don't swing on the internet cable, and with the power going on and off and all, infrastructure wise, it's a challenge. So Monday will be a new challenge. So all of you guys who followed the stream, and I travel. I was last year. I think it was Spain. I don't even remember. Barcelona, Sevilla, Madrid, and then a month and change in Costa Rica. Came back to Chicago. Now another month and change in Costa Rica. And you guys, there's photos of my traveling setup. You could trade from anywhere on the planet with this. So I take a laptop and 2 portable monitors that attach on each side. So I have a smaller 3-screen setup, and I trade and stream from wherever, as long as I got an internet. Just letting you know. GH, I don't know about that. As far as Bitcoin from all exchanges, that's a great question. I think you can get an answer to that in the knowledge base at bookmap.com, or every week, Bruce does an onboarding webinar specifically for those who have questions about setting up Bookmap. And you can ask questions. Okay, let's watch the behavior. We're coming to an outside edge. We know these levels were too high. Full session VWAP is hanging out, and I got my sweep. And this end, I've got my stops at the IB. There it is. And initial balance. And this is an outside edge. Let's watch. Now, I'm not a fan of the mid. You know how I feel about it. I get nauseous with the mid. I want the stops to come out because that's better for me. It doesn't mean that mid sellers won't win the lottery, and they do. The gamblers get paid. I kind of look at this a little differently. I look at all the times I got stopped by just selling the mid because I didn't understand that I was joining all the buy stops. This is early on. 1980, we didn't have a lot. We had measure moves, and everybody, it's all this standard stuff, which of course everybody does. And what everybody does, I would suspect most times doesn't work. So where's my location? Now, for me, it's outside, and I'm going to be looking out in this low volume area. And if this trade works, whenever it happens, and I'm not saying anybody should take it, this is the objective. Let's watch, and I don't call trades. So we're looking now to see the behavior. Where's our sellers? Let's see. Right now, the sellers are here. The buyers are there. This is my little distribution. So I'm watching the volume right there, because if I break below it, and I can just have my little cursor there, if I keep going, I don't have a trigger. I'm going, I have no trigger. Let's watch. I'm looking for micro high volume structure. And please don't take any trades. I take stops all the time. I'm not going to say it's a favorite thing I do, but it's something that is part of our business. It's called cost of production and overhead. Market's still going up. I don't have a trade here. but I am looking for mean reversion. You also have to remember it's Friday and short covering is possible. So I'm just looking and I'm still getting my buyers. You notice I'm tracking these nodes. As long as I'm breaking above them, I don't have anything to do. So you can see, even though I'm stalking a trade, I got nothing going on. Next outside edge is going to be up in here. And I can get a mean reversion structure anytime because we don't know. But the fact I'm coming out here sets up here and here. And I can get a short at any time. There's my high volume. This is a potential trigger right here. Let's try to look at this. The entry would be there. So if we pull back to this area, that would be a potential. This is a trigger. I don't have an entry here. And then this is the target. That's called mean reversion. This is hard. Mean reversion is very tough. Let's see what happens out here. And this is not a trade recommendation. This is a funky location. This is support. So this would need to get under here. So if you take this short, there's a sweep. You would want to be scaling here. And then this is the target, not a trade recommendation. Are you guys with me? Ambiance, how to measure volatility? Well, are you talking average true range? ATR, that you can do if you have other software. There's no ATR measurement in Bookmap. It's more order flow oriented. You would get that from your other software. You know, my higher time frame software that I use is Investor RT. And it exports these levels in the Bookmap, you know, which you see. So that's pretty cool. You know, all this stuff is coming out of another software piece. Now this I do by hand. So this is a short, right? Do you see how I did it? I said, where's my levels? Well, no, not there. No. Boom, trigger. You notice how the sellers took over the change in behavior? The sweep. So that gives me confidence. Here I have support. Notice the retracement. Sweep. This is a structured trade. Your stop would be here. Your entry would be one tick below here. You'd have less than a 3-point risk. Your job is to get risk neutral, and your objective is to come here. That's it. That's at least what I do. You know, I mean, if I'm going to take a 2.5, 3-point risk, I'm not doing it to make 3 points. I'm doing it to come down here. So call it 20 half short from 37. 15, 7, you know, whatever, plus a scale. And if you get scaled and then it comes back and takes you out, as we say, c'est la guerre, then you deploy a trade management process, which you have to vet because it's always going to be rotating. The nature of the market is the auction is what's too high, what's too low, what's retail. At the moment, this is retail. So if I find a price that where the volume dries up, in other words, think of it in the store. If you need a can of tuna for your casserole tonight, and it's $3 a can down the street, there's going to be some buyers of the tuna at $3, but not a lot of volume. If I run out of buyers, the market then is going to potentially rotate to find buyers. And then we rotate back and we can come all the way wherever we go, right? We don't know. So this is the mean up here, the fair price that we rejected. And in the developing higher time frame or daily time frame, this is the mean. The market tends to go from exhaustion back to retail. So for this trade, and it's not a recommendation, this is where we're trying to go. It's called mean reversion, trading in fractals. I hope it's logical. Might seem kind of nutty, but this is trading in multiple time frames as you think about it. But I am not using the clock. I use the participant behavior. And if I can get to my target, I'm all right with this. Are you? KC, you're in a coffee shop with 2 laptops. How do you carry all that? One of our traders in Trader Lab is sitting in the coffee shop in Mexico City. Hmm. Yeah, Starlink doesn't work, W. Bauer. It won't work for me. I've already looked into it, when I travel. So again, this is where we're going. Do you guys have any questions? By the way, I want to just show you what Trader Lab looks like if you haven't, and it's available to all of you. There is no cost for this. I don't know any environment that is a professional, business-oriented chat where you can get education at no cost. And the education focuses on order flow. I don't use indicators. I had to teach myself to speak a language. This is a language. And our translators or indicators are trying to give us some meaning of this output. Okay. And that's all great, except they're lagging, conflicting. And so I had to learn to read. And it allows me to interact on a very timely basis so I can get better entry with order flow, better risk management. And I still take stops. So there. We all take stops. That doesn't stop. Oh, I see we have Powell speaking. Well, that's always nice. If Powell is speaking, I will tell you, if I have reports, I don't trade them. I trade after them. So anyway, let's just go back to Trader Lab. Here's Trader Lab. All this kind of information is in here. Traders post charts, discuss trades, support each other. There's a lot of work to be done. Here's someone who programmed the study in Sierra chart. He's talking about it. There's just a lot here. You guys can all visit Trader Lab. And there's a library of webinars, a document section. You can download those PDFs. Day trading, fantasy versus reality, why most traders using indicators fail. Trader Groundhog Day. I always point this one out because that's when you work hard, curve fit, get winning trades, of course, and it still breaks down because you're always trying to fix something and you're kind of trading from behind. I planned, I saw, I traded. Yeah, I'd like to get that one moved. Ned, if you're in here, up here, it's a good representation of a total process. And the document section is down here somewhere. Where is that? I think I lost it. Huh. It's in here somewhere. Lost it. Anyway, it's in here. Start with the primer webinar. It gives you a high-level overview of this. So let's go see. Our outside edge is up here. I think this trade, I don't know. I have to go take a look and see what's going on with it. So you would have this out here. Nothing wrong with this. You'd be scaled, and then you trade manage. If we take this out, our next outside edge is going to be out here. So that's the next trade. It's as complex as that. It's all random, and this is mean reversion. Now, it's Friday, and we have to be aware that the market is short. And you can write this down. The market goes up to go down, and the market goes down to go up. So next location is going to be out in here. And again, it depends what it does up here. It can just keep going, or I can get the same trade from out here. But I have to get structure and a trigger. So this was too high. That's where, and you have to always look left. Where's the stops? You cannot get blinded. You have to know that up here is a swing and that there's stops. This is a variable high volume node. It was too high. Stops are over here. Now I'm coming outside. Now what I'm going to look for is exhaustion and a potential trigger. And if I don't get it, I don't have a trade. It's not as complicated as that. Here's a change. Liquidity came in the book. This is a triggering structure. Let's see what it does. Not a trade recommendation. You can see how I anticipate where the trade might show up. You see? Now, I don't know, What do I have here? I went into my stops. I'm out an outside edge. This is a potential trigger. Now we're going to watch it. And it's not a trade recommendation. The buyers were here. The buyers were here. The buyers are here. The buyers are there. The sellers are here. Sellers took control here. Break. Notice the change. The potential entry is up in this area. Stop is over here, and you're going for that. It's the same trade. And it's not a recommendation. All trades fail. Not every trade, but all trades can fail because it's random. Final questions. I've got maybe 4 minutes. I appreciate you visiting Trader Lab. Please give a like. Smash the like button. A little smashing of the like button would be good. Also, use the link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. There is no cost for it, and this is a serious community, though. It's very professional. It's very serious. It's about the business of trading, creating sustainability, and differentiating your outcome from most other retail traders. And if you know, the probability of sustainability is extremely low for retail traders. The reason, in my opinion, for that is they're all doing the same thing. And unfortunately, they are trying to create certainty where it doesn't exist. So this short, we're trying to go here, right? Now, let's talk about something very simple and very obvious for us. This is the same trade. Go there. What happened? Scale, trade management, out. Where's the next location? Location, location, location. What is it? I'm not paying that. Let's come back to retail. Same concept, different location. You want to be a trader? This is called trading. Well, I guess that wasn't too high. We found our buyers. All right. What about up here? Well, I'm not paying that. Get out of here. And where's the stops? There, and target. And then possibly, and for me, this is called mean reversion. If you took this short, it's 45, you're going for 20-ish. That's a 20, throw 20 points at it. Would that work for you? This is a Trader Lab. Final questions. Please give a like, subscribe, use the link in the bottom of YouTube if you're interested in learning this. I believe I can teach anyone how to trade. And I'm not being flippant about it. I've been doing this for 45 years, both professionally and otherwise. I have sat on trading desks, trained other traders, sitting on a desk, managing dollars, etc. So I've come from a place of discipline, process, and helping traders overcome their problems and building out edges, because that's what this business is, a business of edge. It's gaming. So let's forget about being right. Everybody is right. If you had no charts, even a button, you didn't know if it was buy or sell, you'd still have winning trades. So it's not about winning. Casinos pay the gamblers. They win. What do the casinos do? Over time, in a random distribution, extract the dollars from the gamblers. If you want to understand the business model, it's gaming. If you want to replicate a successful business model, it is Trader Lab, because we're using a gaming process, which is a proven business model, and we're overlaying structured trades in the process that's proven. We're not trying to reinvent the wheel. We're trying to run in a track that already exists and adapting this business to a similar business that has a 100% random outcome, but the casinos only play games that have an edge. That's what this is. Edge. Are you interested? Come on, visit Trader Lab. I'd love to meet you. Thanks again, guys. Please give a like. And remember, these streams are available to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, develop a trade plan, develop an edge, and together we all get better. Thanks again, guys. And it doesn't matter how long you've been trading, whether you're new at this or you've been doing this, you're an old dog. We have old dogs in the Trader Lab and we have newer traders. It doesn't matter. I only wish there was a Trader Lab available when I started in 1980. There was nothing because there were no off-floor traders. So I was really up on the front end of all this because before that it was all bar charts and measured moves, and it's head and shoulders, all that kind of stuff. Sell the mid. And I will tell you, I have found that might not be a recipe for longevity. Thanks again, guys. Don't forget to hit the like, and I look forward to seeing you. I'll be streaming from Costa Rica, hopefully on Monday. And don't forget the like. Very nice to be liked.